Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views.
Good morning. Happy Monday. Happy July. July. Happy Halloween. Okay, a lot going on today. I'm going to talk in a little quieter than I probably normally would because I've got a sleeping little guy not too far away. European CPI continues to make all-time highs. Energy, tobacco, alcohol, big culprits. They are in a seriously tough spot. I put no money to work in European stocks anytime soon. It's a tough road over there. And you got the new UK PM talking about no more fracking, and they just want to be cold over there, I guess. So broad market, seasonal trading patterns are really playing out this year. The strongest 5 days of the year in the market, typically October 28th through November 2nd. This corresponds roughly to when the market ignored earnings misses from the mega cap tech companies starting last Tuesday and charged higher. Culminating in Friday's 2.5% jump on the S&P. Since 1950, the market has never been down from November to April during a midterm election years. So this favorable seasonal backdrop puts all the more attention on Wednesday's Fed meeting. It really seems like every meeting is just of utmost importance and significance because it kind of is. It dictates liquidity, it dictates policy. And just it dictates risk appetite at this point. As you know, if Powell lays the groundwork for having done much of the heavy lifting with regard to rate hikes and potentially tempering future hikes in terms of magnitude, that would obviously be perceived pretty positively in the marketplace and give a little more credence to that seasonal trading pattern that we're seeing. Yet over here, we're not totally bought in. I'm seriously worried about the services components going forward as part of the inflationary readings we look at, PCE, CPI. People are traveling, eating out, spending money. If you look at the behavior of the average American, they are not in a recession. They show no signs of being in a recession. The labor market is still way too strong, and I think that's going to result in a tricky spot for the Fed to go full pivot and what have you, so we'll see what happens. I still think it makes sense to think about the current rally within a broader earnings-led bear market. I think we are still in that bear market. And in terms of what we're doing, we are buyers of oil service on dips in this market. Again, we've been talking about this now for a couple of weeks. Less price sensitive when it comes to crude pricing. These guys have got visibility going out a couple of years now, I think, in terms of spending going on with E&P companies and integrateds and what have you. So we're also buyers of select industrials to play this seasonal rally. Honeywell, Roper are a couple names that we own. We may add a couple more in terms of industrials that play to fortify the electrical grid. More on that in the days to come. But in the meantime, if it keeps on going, enjoy. And, going back to the old saying I said on Friday, just be wary of picking up nickels in front of a steamroller. Have an awesome day. We'll talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, Grinnellcapital.com.